Every single day, over $7 trillion moves through the financial markets. To put that in perspective, that's more than the entire GDP of Japan and the United Kingdom combined. And that's just in one day. Stocks, currencies, crypto. People are buying and selling assets around the clock, across every time zone on the planet. From Wall Street hedge funds managing billions to a 22-year-old trading from a laptop in their bedroom. But what does trading actually mean? How does it work? What are the different markets you can trade? And more importantly, how do regular, everyday people use it to grow their money? In this video, I'm going to break down exactly what trading is, explain the 3 biggest markets you can trade in, walk you through how a real trade works from start to finish, and give you a clear picture of what this world actually looks like. In plain, simple language. No jargon, no fluff, just clarity. Whether you're completely new to this or you've been curious for a while and just want a solid foundation, this video is for you. Let's get into it. At its core, trading is simply the act of buying and selling. That's it. Strip away all the complexity, all the charts, all the indicators, and trading is just a transaction between a buyer and a seller. Think about it this way. If you've ever bought a phone for a good price and later sold it for more than you paid, you've already completed a trade. You bought low, sold high, and kept the difference as profit. Trading in financial markets works on the exact same principle, except instead of phones or sneakers, you're buying and selling financial assets. These financial assets can be shares in a company, like Apple or Tesla. They can be foreign currencies, like the US dollar or the euro. They can be cryptocurrencies, like Bitcoin or Ethereum. They can even be commodities like gold, oil, or silver. The goal is straightforward. You buy an asset when you believe its price will increase, and you sell it once it does. The difference between your buying price and your selling price is your profit. Now, here's something that surprises a lot of beginners. In some markets, you can also profit when prices go down. You can sell first and buy back later at a lower price. This is called shorting, or going short. It sounds counterintuitive, but it's a standard part of trading. Don't worry if that doesn't fully make sense right now. We'll cover that in detail in a future video. Now, you might be wondering, what's the difference between trading and investing? People use these words interchangeably, but they're actually quite different. Investing is about the long game. You buy an asset, usually a stock or an index fund, and you hold it for months, years, sometimes decades. You're betting on the long-term growth of that asset. Think of someone who bought Amazon stock in 2010 and still holds it today. Trading, on the other hand, is about shorter time frames. Traders buy and sell more frequently, sometimes within the same day, sometimes over a few days or weeks, trying to profit from short-term price movements. It's more active, more hands-on, and requires a different skill set. Neither approach is inherently better or worse. They're just different strategies for different goals. But on this channel, we're going to focus primarily on trading, understanding the markets, reading charts, managing risk, and building a system that works. Let's start with the most well-known market in the world, the stock market. Here's how it works. When a company needs money to grow, to build new products, hire more people, expand into new markets, it has a few options. It can take a loan from a bank. It can use its own profits, or it can go public. Going public means the company offers pieces of ownership to everyday people like you and me. These pieces of ownership are called shares, or stocks. When you buy 1 share of Apple, you literally own a tiny fraction of that company. You become a shareholder. This process of a company going public for the first time is called an IPO, an initial public offering. After the IPO, the company's shares are available for anyone to buy and sell on a stock exchange. Stock exchanges are like marketplaces where buyers and sellers meet. The biggest ones you'll hear about are the New York Stock Exchange, also known as the NYSE, and NASDAQ in the United States. There's also the London Stock Exchange, the Tokyo Stock Exchange, and many others around the world. Now, what actually makes a stock's price move? It comes down to one fundamental concept: supply and demand. If a company releases amazing earnings, launches a groundbreaking product, or gets positive news coverage, more people will want to buy the stock. When demand increases and there aren't enough sellers, the price goes up. On the flip side, if a company reports losses, faces a scandal, or the economy takes a downturn, people rush to sell. When supply of shares increases and there aren't enough buyers, the price drops. As traders, we study these price movements using charts, patterns, and technical indicators to predict where the price might go next. This skill is called technical analysis, and it's one of the most important things you'll learn on this channel. One more important thing about stocks: they have fixed trading hours. The US stock market is open from 9:30 a.m. to 4 p.m. Eastern Time, Monday through Friday. Outside of those hours, regular trading is closed. This is different from some other markets, as you'll see in a moment. Now let's talk about the largest financial market on the planet: Forex. That's short for foreign exchange. Forex is where currencies are traded. And when I say it's the largest market, I'm not exaggerating. The Forex market trades over $7 trillion every single day. To put that in context, the entire US stock market trades about $500 billion per day. Forex is roughly 14 times larger. So how does Forex work? At its simplest, Forex is about exchanging one currency for another. You do this every time you travel abroad. If you're going from the US to Europe, you exchange your dollars for euros. If the exchange rate is $1 equals 0.85 euros, then your $100 gets you 85 euros. But here's where it gets interesting for traders. These exchange rates are constantly changing. The value of the euro against the dollar might go up today and down tomorrow. Forex traders make money by predicting these movements. In Forex, currencies are always traded in pairs. You're always buying one currency and selling another at the same time. The most popular pair in the world is EUR/USD, the euro against the US dollar. Here's how to read it. If EUR/USD is trading at 1.0850, that means 1 euro is worth 1.0850 US dollars. If you think the euro will get stronger, meaning that number will go up, you buy the pair. If you think the euro will get weaker and that number will go down, you sell the pair. Other popular pairs include GBP/USD, the British pound against the dollar, USD/JPY, the dollar against the Japanese yen, and GBP/JPY, pound against the yen. There are dozens of tradable currency pairs, but as a beginner, you'll want to focus on the major pairs first, because they have the most liquidity and the tightest spreads. We'll explain what spreads and liquidity mean in a future video. What makes Forex especially attractive to traders is its schedule. Unlike the stock market, Forex is open 24 hours a day, 5 days a week. It opens on Sunday evening and doesn't close until Friday evening. The reason it's open around the clock is that it operates across 3 major trading sessions that overlap. The Asian session, which covers markets in Tokyo and Sydney. The London session, which is the most active and covers Europe. And the New York session, which covers the Americas. As one session closes, another opens. This means there's almost always an opportunity to trade, no matter where you are in the world or what your schedule looks like. Forex also offers something called leverage. In simple terms, leverage allows you to control a large position with a relatively small amount of money. For example, with 100-to-1 leverage, you could control a position worth $10,000 with just $100 in your account. Now, leverage is a double-edged sword. It can multiply your profits, but it can also multiply your losses just as fast. It's one of the main reasons beginners blow their accounts early on. We're going to dedicate an entire video to leverage because it's that important to understand properly before you risk real money. For now, just know this. Forex is the market most day traders gravitate towards because of its massive liquidity, its 24-hour access, the ability to start with smaller accounts, and the wide range of currency pairs available to trade. And then there's the newest and most talked about market, cryptocurrency. If you've been on the internet in the last few years, you've almost certainly heard of Bitcoin. Maybe you've heard stories of people making life-changing money from crypto. Maybe you've also heard stories of people losing everything. Both are true, and that's what makes this market so unique. So what actually is cryptocurrency? At its core, crypto is a digital form of currency that exists entirely online. There are no physical coins or notes. It's powered by a technology called blockchain, which is essentially a decentralized digital ledger that records every single transaction publicly and permanently. The word decentralized is key here. Traditional currencies like the dollar or the euro are controlled by central banks and governments. They can print more money, set interest rates, and influence the economy. Cryptocurrencies, for the most part, are not controlled by any single entity. They run on code and consensus. Bitcoin was the first cryptocurrency, created in 2009 by an anonymous person or group known as Satoshi Nakamoto. It remains the largest and most well-known crypto to this day. Ethereum is the second largest, and it brought additional functionality like smart contracts, essentially programmable agreements that execute automatically. But beyond these two, there are thousands of other cryptocurrencies, often called altcoins. Now, here's what makes the crypto market different from everything else we've talked about. The crypto market never closes. It trades 24 hours a day, 7 days a week, 365 days a year. There are no sessions, no holidays, no weekends off. The market is always live. For some traders, this is a huge advantage. You can trade whenever it fits your schedule. But for others, it can be exhausting. If you're not careful, you can find yourself glued to charts at 3 a.m., making emotional decisions. This is why discipline and a clear trading plan are non-negotiable in crypto. Crypto is also known for its extreme volatility. It's not unusual for prices to swing 5, 10, or even 20% in a single day. For comparison, a 2 to 3% move in the stock market is considered a big day. In crypto, that's a quiet afternoon. For traders, this volatility is a double-edged sword. It creates massive opportunities to profit, but it also creates massive risk. The same move that could double your money in a week could wipe out your entire account if you're not managing your trades properly. You can trade crypto on dedicated exchanges like Binance, Coinbase, and Bybit, or through traditional brokers that now offer crypto alongside Forex and stocks. Many of the same charting tools and analysis methods we'll teach on this channel apply to crypto as well. Whether crypto is the right market for you depends on your risk tolerance, your schedule, and your trading style. But regardless of whether you plan to trade it or not, understanding how it works is essential knowledge for any modern trader. If you're serious about trading, you need more than just knowledge. You need the right tools. At the DTCtools.com, we've built 3 professional-grade strategies: CCT, DTC, and DTC Precision Pro, each with its own TradingView indicator, MT5 automated bot, and live signals group. Whether you're passing a prop firm challenge, managing a funded account, or trading your own capital, we have a system built specifically for your goal. No guesswork, no emotions, just systematic, rule-based trading, engineered for consistency. Follow us on Telegram, link is in the description, and use code TELEGRAM20 at checkout for 20% off your next order. Visit the DTCtools.com and find the tool that fits your trading journey. The DTC Tools? Trade smarter? Now that you understand the 3 major markets, let's bring it all together and walk through how an actual trade works, step by step. Because understanding theory is one thing. Knowing how to apply it is what actually matters. Step 1. Choose your market. Are you going to trade stocks, Forex, or crypto? Each has its own schedule, its own characteristics, and its own personality. There's no universally best market. The best one is the one that fits your goals, your schedule, and your personality. We'll help you figure that out as this series progresses. Step 2. Find your setup. You open your charting platform. Most traders use TradingView, which is free, and you start analyzing an asset. You look at the price chart, identify patterns, check your indicators, and form a view. Is the price likely to go up or down from here? This process is called analysis, and we'll be spending a lot of time on this in future videos. Step 3. Decide your entry. This is the specific price at which you want to get into the trade. Some traders enter immediately at the current market price. Others set a pending order at a specific level and wait for the price to reach it. Both approaches are valid. Step 4. Set your stop loss. This is absolutely critical. A stop loss is a predetermined price level where your trade will automatically close if the market moves against you. It's your safety net. It protects your capital from a single bad trade wiping out your account. Professional traders never, and I mean never, enter a trade without a stop loss. Step 5. Set your take profit. This is the price level where you'll close your trade and collect your profit. Having a target before you enter the trade removes emotion from the equation. You're not guessing when to exit, you've already planned it. So to recap, you choose a market, you analyze and find a setup, you enter at a specific price, you set a stop loss to protect yourself, and you set a take profit to lock in your gains. That's the anatomy of a trade. Every single professional trader in the world follows this structure. They might use different strategies, different indicators, different time frames, but the framework is always the same. Entry, stop loss, take profit, manage, exit. And that's exactly what we're going to build together on this channel. Step by step, video by video, until you have the skills and the confidence to execute trades like a professional. So let's quickly recap everything we covered today. Trading is the act of buying and selling financial assets to profit from price movements. It's different from investing because it focuses on shorter time frames and more active decision-making. The three biggest markets you can trade in are the stock market, where you buy and sell shares of companies; the Forex market, where you trade currencies against each other, and which is the largest market in the world; and the crypto market, where you trade digital assets like Bitcoin and Ethereum in a market that never sleeps. We also walk through the 5 steps of every trade. Choose your market, find your setup, decide your entry, set your stop loss, and set your take profit. Master this framework and you're already ahead of most beginners. If you're just starting out, don't worry about choosing the perfect market yet. Don't worry about strategies, indicators, or any of the advanced stuff. Focus on building your foundation first. Understand the basics, understand how markets work, and everything else will click much faster. And that's exactly what this channel is here for. Every video is designed to take you one step closer to becoming a confident, skilled trader. In the next video, we're going to take a deep dive into how the stock market actually works, how prices are determined, what moves them, and how you can start reading stock charts. You don't want to miss it. If you found this video helpful, hit that subscribe button so you don't miss the next one. And if you want free trading updates, market insights, and to stay connected with a community of traders who are learning together, join our Telegram channel. The link is in the description below. I'll see you in the next one.